Morning and events. Let's continue with the accounting from income plus. And I'm in exercise 4, self-examination questions, page 40, standard 12, accountancy book. Right? I'm in exercise 4, sum number 3. From the following details, calculate the missing figure. Just copy it here so that we don't create the format. This is basics. So, copying the format here. I'm in sum number 3. Right, so okay, let me tell you all these things. Yeah, closing capital 80,000. Additional capital introduced during the year 30,000. Less additional capital. Then this will give 50,000 as net capital. And drawings during the year 15,000. Drawings during the year 15,000. Then loss for the year 25,000. So it's loss for the year 25,000. Then we have to find out what is the opening capital. So adjusted closing capital 50,000 plus drawings 65,000. So loss made during the year is 25,000. So the opening capital is equal to adjusted closing capital plus loss made during the year. That is 65,000 plus 25,000. Loss made during is 90,000. Opening capital is equal to 90,000. The next one, while this is getting saved, next one is from the following details, calculate the capital as on 31st December 2018. We have capital as on 1st January, and we have goods withdrawn for persons by the owner 30,000. We have additional capital introduced during the year 15,000 and profit for the year 60,000. We have to calculate from the following, calculate the closing capital as on 31st December. While this is getting saved, any doubts or applications that you are getting in, or any change in the ways that we have to present the problems, please let us know so that I can work on it. Okay, I'm just copying the format here and putting it side by side. I'm in 4. Right here we have capital as on. I'm removing all these things. So now what we have here capital as on 1st January 2018, that is 1 lakh. Opening capital is 1 lakh, and we have profit for the year 60,000. Profit for the year 60,000. So adjusted closing capital is equal to profit for the year plus opening capital plus opening capital 1,60,000. Then goods withdrawn for personal use by the owner 30,000. 30,000 goods withdrawn by the so net capital will become adjusted closing capital minus drawings. That will be 1533. That will give 1,30,000. Then we have additional capital introduced during the year 15,000. So closing capital is equal to capital plus additional capital introduced during the year. So closing capital is equal to 1,45,000. Once you have the format ready, you have the basic understanding clear, then it is a question of filling in the format and then ensuring that you are, it's basically like a fill in the blanks. You should be clear on The format, you should be clear on the concept. Concept as such is more important. Let's do the next one. Just copying the format here as usual. And here we have to calculate drawings during the year. Next one. The format here. Now I've removed the existing data. So what is that we have? We have capital as on 1st April 2008. That is opening capital is equal to 40,000. Then we have closing capital is 50,000. 50,000. Then we have additional capital introduced during the year 7,000. 7,000. So closing capital minus additional capital will give net closing capital 43,000. Then we have profit for the year 8,000. You can see here profit for the year 8,000. Profit for the year 8,000. So adjusted closing capital will become opening capital plus profit made during the year. So adjusted closing capital is equal to 48,000 and net closing capital is 43,000. So drawings will be 5,000. That is adjusted closing capital minus closing capital. Right? It's 5,000. Hope this is clear, right? Let's the next one. For balances in the books of Thomas as on 31st March 2019. Prepare a statement of affairs as on 31st March and calculate capital as on capital as at that date. So we have to prepare a statement of accounts, statement of affairs. So I'm copying the format here. I'm copying the format here and removing the data here so we can use the format. Okay, I'm in exercise 6, exercise 4, 6, page 40, class 12 accountancy, right? Yeah. So what are the data we have here? Sundry creditors 6 lakhs. Sundry creditors 6 lakhs. Furniture 80,000. 80,000. Then we have land and buildings 3 lakhs. 3 lakhs. Then we have sundry debtors 3 lakhs 20,000. 3 lakh 20,000. Then we have bills payable 1 lakh 20,000. Bills payable 1 lakh 20,000. Then we have cash in hand 20,000. 20,000. We also have bills receivable 60,000. Bills receivable 60,000. Then we have stock 2 lakh 20,000. Closing stock 2 lakh 20,000. So we are done with everything. So now we have to calculate the closing capital, which is equal to asset minus liabilities will give you the closing capital. That is equal to 10 lakhs minus 7 lakh 20,000. So 2 lakh 80,000 is the closing capital, which is a same figure. Right? Let's get into the next one. While I go to the next one, I just want the students to revise all these questions and come back to me with any questions or clarifications. You can also try these questions at home and let me know for any clarifications that you have so that I can clarify it in the next class. Okay, thanks and have a great day.